Okay, this is a double entry bookkeeping question. It is a question that appears every year on paper 2 of the higher level. It gets asked in different ways, but if you get a grasp of double entry bookkeeping, you should be able to answer all types of questions that come up. So it's a guaranteed question every year on the junior cert. And this, I'm doing the 2008 question, which is Kelly Limited. So if we go straight to the question, it might be the best way to explain what's going on. So part A of the question says, record the following credit transactions in the purchases and purchase returns book of Kelly Limited for the month April 2008. Post relevant figures from the books to the ledger accounts. Okay, so what they're asking us to do is take these credit transactions, in this case it's purchases and purchase returns, so buy now, pay later, and we have to record them. We have to put them in some sort of template format. That is the first step we have to do, and I see that there's 3 transactions there that have to be put in to a template. So let's start by doing that. Now, this is not part of the double entry process. Basically, all we're doing here is we're taking some transactions that have been written out and we're putting them into this purchases daybook or purchases book, whatever you want to call it. The daybook thing doesn't matter. And purchase returns daybook. We're entering these transactions into the daybook so they're in a clear template format. Let's start by doing that. So the first so these are purchases, so they're going to the purchase returns table. So the first transaction was on the 3rd of the 4th, 2008, always day, month, year. And we bought from Knee Limited. So Knee Limited goes in there. And it was, he issued us with invoice number 12. Now the folio column is not quite clear yet. The folio column is a reference column. It'll tell you where in the accounts this transaction is going to appear. This transaction is going to appear in the creditor's ledger, CL, creditor's ledger, account number 1 in the creditor's ledger, and that'll become a bit clearer later on. Okay, there's VAT of 13.5% in this, and the amount is 16,000. So that is 16,000 with VAT at 13.5%. Okay, the second transaction occurred on the 9th of the 4th, 2008. And that was Hay Limited. Okay, put the caps locked on. Hay Limited. And Hay Limited issued us with invoice number 67. And he is going to be, or she is going to be, creditor's ledger account number 2. And the amount there was 22,600. Okay, I'll delete that there. These haven't added up for me, so I'll have to add them up. So add all of these up here. They're all the credit purchases that have been recorded. Now, I'm going to put in some extra folios underneath these 2 figures here. That'll become, again, it'll become clearer later. And I'm going to put GL1 here. And I'm going to put GL2 here. That means that this figure is going to go into general ledger account number 1, and this figure is going to go into general ledger account number 2. But again, as I said, that'll become clearer later. So, the third credit transaction said on the 15th of the 4th, 2008, said returned goods to Knee Limited. So 15th of the 4th, 2008, returned goods to Knee Limited. And he issued us with credit note number 5. Credit note number 5. And the folio for that, well, Knee Limited we know is creditor's ledger from up here, creditor's ledger account number 1. So that's going to go into CL1. And the amount of that was 7,000. Okay, for some reason this isn't working here, so I'll total them up there. Okay, and I'm going to give these 2 figures here separate ledger accounts. So this is actually going to go into its own ledger account in the general ledger. and that's going to be general ledger account number 3. And this figure is going to go into the VAT account, which is the same as the VAT up here, so that's GL2. So now I have, okay, excuse me. So now I have entered the credit transactions in the day books. The first part of the question said record the credit transactions in the purchase returns book. That's fine. The next part is, it says post the figures to the relevant ledger accounts, which I haven't done yet, and that's what I'm going to have to do now. So I'm going to have to post these figures to the relevant ledger accounts. So let's start by doing that. So now I'm going to move over to my ledger. The ledger is the document that has usually a big thick line down the middle. And this ledger is going to be a creditor's ledger. You can see that the ledger has two sides to it. On the left hand side here, left of this thick line, you've got the debit side, and right of it you've got the credit side. Now what I'm doing here, and just this system here is supposed to help, just excuse me a sec, just fix this. Nope, alright, messy, and that is minus, and that minus won't seem to go for me, and that is plus. Okay, this EARL system here. E stands for expenses, A stands for asset, R stands for revenue, and L stands for liability. So if you're making an expense bigger, you add something in on the debit side. If you're making an asset bigger, you add something in on the debit side. A revenue smaller, it goes on the credit side, and a liability smaller goes on the debit side. Now, here what we're doing is we're making our creditors bigger by purchasing off them. We're making a creditor who's a liability, somebody we owe money to, we're making that bigger. Therefore, we know if we're making a liability bigger, L plus, it's going to go in on the credit side of the ledger accounts. So here's where double entry starts. The first part of double entry is to enter it on one side of the accounts, and then the second part of where you enter it on the opposite side of the accounts. So here we have creditors ledger account number 1. As I said, if you remember back here, that need limited is going to be account number 1, said here in the folios. So need limited account number 1 in the creditors ledger. And that transaction occurred on the 3rd and the 4th, 2008, and it was credit purchases. The cross-reference of that is PDB. That's coming. This figure is coming from the purchases daybook, and I take this figure, the amount including the VAT. So 18,160. 18,160. Now the next transaction I see is purchase goods on credit from Hay Limited. And that's also got to be put in. And it goes in on the same side. So this transaction here is to be put in. So the 9th of the 4th, 2008. Skip a few lines under here. I've skipped about 4. That should be enough to finish the accounts later on. And this is credit purchases. And again, the amount including the VAT is 25,651. Coming from the PDB, 25,651. Okay. The third transaction is the returns. We returned goods to NE Limited. Now, we returned goods to NE Limited. In a sense, what we're doing here is we're making a liability smaller. We're going to decrease the amount we owe our creditor, NE Limited, because we're returning some purchases to it. And we know that that goes on the debit side. So a purchase returns will obviously go on the opposite side to a purchases. So 15th to the 4th debit side, 2008. And that is credit purchase returns. Just going to shorten it up to fit in. And that's coming from the PRDB, the purchase returns daybook, which is here. And it's this figure here, including the VAT, 7945. 7945. Okay. That's the first part of double entry done. We have not done double entry yet. What double entry says is that every euro of credit, every euro that's entered on the credit side must also be entered on the debit side, and every euro entered on the debit side must also have a corresponding entry on the credit side. And the corresponding entries are going to fit in down here in the general ledger. So skip 4 lines underneath that transaction and open a general ledger. And I've already said here that the first account in the general ledger, GL1, is going to be a purchases account. A purchases account. Okay. And with the purchases account, what we're doing here is we're making an expense bigger. An expense of the business, which is purchases, we're going to make it bigger. So it's going to go in on, the figure's going to go in on the debit side. And the figure that's going to go in is the ex-VAT figure of 38,600. So 38,600. And what we do is, because we're posting the total amount of purchases, we're not posting them as individual transactions, we're posting the total at the end of the month. We're going to put the date at the end of the month. And that is total creditors and that comes from the PDB, and it's 38,600. So now over here I have a total of 43,811 of credits, but I only have 38,600 of debits for those. I haven't fully completed double entry. The remaining debits for those credits come from the VAT, which is 5211, and that's general ledger account number 2, which is VAT. And that's 5211. And again, it's the total, so it's the end of the month. Posting those totals. And that's VAT on, always say what the VAT is on in the VAT account. VAT on credit purchases, coming from the purchase table. So now, every euro of credit here has a euro of debit on the opposite side of the account. So that's double entry bookkeeping. We're keeping the check system going. Okay, sorry now. It's just St. George's disk station popping up. Okay, now we've forgotten here that we've put 7945. Sorry, I see here as well. I haven't named this account Hay Limited. We've put in 7945 of debits here, and these debits need credits. So what I'm going to do is I'm going to come down here and I'm going to open a purchase returns account. So skip 4 lines under there and open a purchase returns account. And obviously if purchases are entered on the debit, purchase returns are going to be on the opposite side. Again, the end of the month, because it's the total for purchase returns, even though there's only one transaction this month, we still say we're posting the total. So total purchase returns, coming from the purchase returns daybook. And again, it's the amount excluding the VAT, which is 7,000. So now I have 7945 of debits, but I only have, so I only have 7,000 of credits. There's another 945 of debits here that represents the VAT at purchase returns. So again, the end of the month, 30th of 4, 2008. And what is it? It's VAT on credit purchase returns. Coming from the purchase returns daybook. And it's 945. So now, every euro of credit has a euro of debit, and every euro of debit has a euro of credit. So we've now completed part A of the question. Now we move on to part B. said, record the following bank transactions for the month of April in the analysed cash book of Kelly Limited, post relevant figures to the ledger accounts. So here's the analysed cash book. So you open up your analysed cash book, and the first thing we're going to do is title it. So it's the analysed cash book. I'll always title the accounts of Kelly Limited for the month, and this month is April 2008. Okay. And the first transaction that goes in here is before we do that, in the question they tell us the how we're to fill out the analysis columns. So the analysis columns in this question, now the first columns are always their date, details, folio, and on the debit side their receipt number, credit side that column is check number, and then we have bank. It tells us bank, sales, VAT, and share capital. And on the credit side, they've told us in the question, it's bank, purchases, light and heat, and creditors. Okay, so now those have been filled in. Okay, the first transaction, it said on the 1st of the 4th 2008, shareholder invested 150,000 and this was lodged. So that's money coming into the firm. Money coming into the firm always goes on the debit side. In a sense, you're making the bank balance bigger, which is an asset. And we know from our Earl rule, if you're making an asset bigger, it's a debit side. So money coming in on the debit side. Okay. So the 1st of the 4th, 2008. And this is the first part of double entry. We're entering something on the debit side that'll need a corresponding entry on the credit side at some point in the future. So this is share capital, and the folio. And the folio for this is going to be in the general ledger. Now the next available account in the general ledger is account number 4. So this is going to be GL4. That should be in black. All in black actually there. Just make sure these are going to go into black as well for me. And we issue that person with receipt number 24, the company did, who made the investment, and it's 150,000 into the bank. Every transaction goes into the bank column, and then you also put it in one or two of the analysis columns as well. So 150,000 in the share capital column as well. Okay, the next transaction was purchase for resale. So these are cash purchases as opposed to credit purchases. We pay for some goods by cash or by check. Money going out of the firm. So credit side, 2nd of the 4th, 2008. And it's purchases. And the folio for that. Well, it's going to be 2 folios, I think, really. Because there's VAT on those purchases as well. If we go back to our ledger accounts, we know the purchase account is account number 1 and the VAT account is account number 2. So the folio, the cross-reference is GL 1 and 2. GL 1 and 2 really there. Sorry, I'm just going to squeeze that in a bit better. GL 1 and 2. And that's with check number 45 we're paying. And that amount, including VAT, is 79450. 79450 made up of 70,000 purchases. Excuse me. I see I've left out a column here actually. Sorry. There should be a VAT column there. My mistake. Light and heat here, and then creditors here. Sorry. That's my mistake. So VAT of 9450. So 70,000 and 9450, 79450. Okay, the next transaction, paid electricity bill, money going out. And that is 13th of the 4th, 2008. Electricity. And that's going to go into the general ledger as well. Now the next available account is going to be general ledger account number 5. So GL5, and we paid that with check number 46, and the amount is 1700. That goes under light and heat obviously as well. 1700. Okay, the next one is cash sales lodged, so that's money coming in obviously, so you made some sales in cash, and that's on the 19th of the 4th 2008. Cash sales, that is GL. That's going to actually be an unusual one because the next available general ledger account is account number 6, but there's also VAT on those, and we know the VAT account is account number 2 in the general ledger, so GL 6 and 2. And there's no receipt number here, so the total amount, it tells us, including VAT, was this, broken down into 80,000 sales. The question tells us 10,800 of VAT. The last transaction is you paid Hay Limited. If you recall here, Hay, who's one of your creditors, you're going to pay him some of the money you owe him. So money going out of the firm credit side, 28th of 4, 2008. Hay Limited, and he is CL2, creditors ledger account number 2, and that's check number 47, and we paid him 17,500 and 17,500. Okay, before I go any further, what I'm going to do is I'm going to balance the accounts here. Now, to balance the accounts, what I have to do is I have to find out which side is larger. Is the debit side bank column larger, or is the credit side bank column larger? And looking at it, you can see clearly that the debit side bank column is larger, and the amount of the debit side bank column adds up to 240,800. So whichever side is larger, you put it in, you draw this, you skip a line under the last transaction here, draw this double line the whole way across the page like I've done, and then in between that double line you put the total amount of the larger bank column in between the lines here. So I'm also going to put it on the credit side here, in between the lines. So draw your double line, and I put this in between the line. Now these three figures do not add up to 240,800. But what will make them add up to that is what we call the balancing figure. And the balancing figure here is 142,150. And what that means is that at the end of this month, Kelly Limited has a balance that will be carried down into next month, a positive balance of 142,150. The reason I know it's positive is because it's going to go from above the double line here on the credit side to below the double line here on the debit side, which means it's positive. If it's below the double line on the debit side, it's positive. That's going to be 142,150. It's a positive closing balance in the cash book, which is in essence the bank account. So asset is a debit balance, and this is a debit balance, which means it's an asset of the firm, which means it's a positive bank balance of 142,150. CD here stands for carried down, BD stands for brought down. You put those into the folio columns. The last thing I've got to do is add up the analysis columns. Now, it turns out that there's only one transaction in each analysis column, but still, total them up and put those totals in between that double line that you drew. And I total them up. Now, the first part of B, part B of the question said, record the following band transactions for the month of April in the analysed cash book. That's done. Then it says post the relevant figures to the ledger accounts. Now, every euro of debit here in this bank column needs a euro of credit somewhere in the ledgers. And every euro of credit here in this bank column needs a euro of debit somewhere in the ledger accounts. So we're going to start off with these this transaction here, the first transaction, share capital account. And I said I'm going to open a share capital account. So this euro, these 150,000 euros of debits need 150,000 euro of credits. And where those are going to come is here in a share capital account. So skip a few lines under the purchase returns account and open a ordinary share capital account. And as I said, every euro of debit needs a euro of credit. So on the 1st of the 4th, 2008, now whenever you're posting something from the analyzed cash book, the details are always bank, and the folio is always ACB, analyzed cash book, and the amount is 150,000. So now those euros have been double entered, this 150,000 on the debit side here, credit side here. Next one, you can skip, you just need to skip one line I think here, because there's no further entries into that account. The next entry was the purchases on the 2nd of the 4th. So this 7945 of credits needs 79450 of debits. And there's going to be two entries there. There's going to be the 70,000 on the debit side of the purchases and the 9450 into the VAT. So that means this 7945 credits has 7945 of debits. And that's in the 2nd of the 4th, 2008. Bank CB here, our bank ACB. And down here, and it's just slightly different in the VAT account. You just always say what the VAT is actually on. So in this case, the VAT is on cash purchase. And that comes from the ACB. Okay. So now the first two transactions have been dealt with. The third transaction paid electricity bill. Again, 1700 of credits needs 1700 of debits. If you remember your Earl rule, if you're making an expense bigger, which we are, that goes on the debit side. Expense bigger, debit side. So we're going to open a new account, account number 5, and that's going to be called light and heat. Or if you called it electricity, that's fine. These euro of credits needs euro of debits, so 1700 here. And that's on the 13th of the 4th, 2008. Bank, analyzed cash book, 1700. Okay, the next transaction was cash sales lodged. 90,800 of debits needs 90,800 of credits somewhere in the account. And those are going to come in two places. We're going to open, just have to skip one line there. And we're going, because I don't think there's any more light and heat transactions. I'm going to open a sales account, and that is going to be account number 6 in the general ledger. Account number 6, debit side is 80,000, the amount excluding the VAT. It's on the 19th of the 4th, 2008. Bank, ACB. But I have 90,800 of debits here. Sorry, my bad. I've put that in on the wrong side. My mistake. Remember back to our Earl rule, a revenue. If you're increasing revenue, which is sales obviously is revenue for the firm, it should go on the credit side. And of course I made a mistake with a double entry because these are debits, therefore this should be credit. And that's 80,000 there, and the other 10,800 goes in the VAT account here. 10,800 here. 19th of the 4th, 2008. And that's VAT on cash sales coming from the ACB. Last transaction then is we paid hay. So on the 28th of the 4th, money going out here, credit here, which means it's going to be debit up here. And that was 17,500. And that was on the 28th of the 4th, 2008, and that's bank. The only time it's not bank ACB when you're posting from the analyzed cash book is when you're putting it into the VAT account. Okay, so now I've posted all the relevant figures from the analyzed cash book to the ledger. Moving on to Part C. Part C says balance the accounts on the 30th of April and extract a trial balance. And we are going to do that now. So we've already balanced our analyzed cash book. That's done for us. And then we're going to balance our ledger accounts. Any account that has entries on both sides of it, both debit and credit, will need to be balanced. And the way you balance is you skip a line under the transactions here, and you're going to draw your double line again across the transactions there. So draw your double line. Now, similarly, which side is larger? Well, in this question, the credit side is obviously larger, so that's going to go, that amount, the amount of the larger side, the total of the larger side goes in on both sides. 18,610. And obviously you can see here that 7945 does not add up to 18,610, which means there's a figure missing from here. The figure missing from here is the balancing figure, which is 10,215. And that's at the end of the month, 30th of the 4th, 2008. That's the balancing figure carried down, which will be carried down to here. So the first of the next month, it'll become the opening balance for the next month. Balance brought down, BD below the line, brought down is 10,215. 10,215. Okay, I'm just going to copy this here to make it easier for myself, just here with the VAT account as well. Okay, so again, the credit side amount is larger here, 25,651. And put 25,651 here. So there's obviously a figure missing here that will make this add up to 2651, which is the balancing figure, which is 8151. And same as above here, and same as below here. And that's 8151. Okay, so those two accounts have been balanced. So that means that for Knee, at the end of the month, I still owe him 10,215. It's below the line in the credit, which means it's a liability. So I still owe him 10,215. And I still owe 8151 at the end of the month. I still owe my creditors more. Okay, coming down to the general ledger. This account only has transactions on one side, so you don't have to do the elaborate balancing that we did above. You just have to draw a double line, and you just have to total it up. So the total purchases, I like to put it in red, is 108,600. The VAT obviously has entries on two sides, and I can see from this that the debit side is larger. That's nearly 14,600 odd, whereas this is only about 11,700 odd. So the total of the larger side goes in between the line on both sides. So skip a line, draw your double line, and that total is 14,661. That goes in between the lines on both sides. And then I take away these two figures to get the balancing figure here. What figure will make this account balance? The answer is 2916. 2916. So at the end of the month, the balance carried down is 2916, which is the opening VAT balance for the next month. Brought down below the line, 2916. Okay, and I can see here that all the rest of the accounts here only have one transaction in them. Therefore, with the junior cert, you do not have to balance these accounts. Because they only have one transaction in each of them, you can take the figures as they are and post them into the trial balance. Okay, the trial balance is the last thing we have to do. We have to extract the trial balance from the accounts. Now this is the trial balance, Kelly Limited, and it's the trial balance on the 30th of the 4th 2008, so at the end of the month. Trial balance has a details column here, and then it has a debit column and a credit column, and you pull the closing balances out of the ledger accounts as they are and put them into either the debit column or the credit column, depending on what type of balance they are. But the first balance I'm going to put in is actually the closing balance in the analyzed cash book, my bank balance. And I see that it's below the line on the debit side, so therefore it's a debit balance. And it's a debit balance of 142,150. So we'll call that bank 142,150. 142,150. Okay, working through the ledger then. I see I have knee limited here, and that's 10,215. So knee limited, a creditor, that's obviously going to go on the credit side, 10,215. Then I have Hay Limited here, another creditor, and that's 8,151. Okay, and then I move down to my general ledger, and I have a debit purchases balance of 108,600. That's 108,600. I have a VAT balance here. Below the line on the debit side, it's a debit balance then of 2916. So VAT 2916. I have a purchases returns balance of 7,000. I have ordinary share capital balance, credit side 150,000. I have a light and heat debit balance of 1,700. Right, light and heat 1,700. And then finally I have a sales balance, credit balance of 80,000. 80,000. Okay. Now here's where we see if we've done the question right. The debit side total should match the credit side total. So we've got 255,366 here. And on the credit column we've got not the correct total. I'll tell you why, because I only put 8,000 in here and that should be 80,000. I think that should make it right. Yep, there we go. So we've completed double entry correctly, because every euro of debit has a euro of credit.